Welcome everyone to Ultimate Technical Analysis course of day two. This is Big Bull here. Today we're going to talk about candlestick patterns and we're going to look at some of the key candlestick patterns out there. And then you're going to learn how you can take entries, exits, and then how you can identify those patterns easily. So now let's understand the basics behind the candlestick patterns. So the candlestick patterns, guys, is just I want to look at some of the key reversal areas. Candlestick pattern shows you the key reversal area from support or resistance. If they are appear you know if they are appearing in a support or resistance or in a supply and demand, only then I'm going to look at it. Otherwise, let's say if candlestick patterns are appearing in this resistance, unless there is a shooting star, only then I'm going to go ahead take a trade on it. If there's a shooting star anywhere in between right here, then I do not care about it. I don't trade it because the risk to reward level is pretty low on trading these patterns somewhere in the middle. So I'm always going to look for these patterns either at the swing highs or the swing lows. So the first candlestick pattern that I'm going to talk about is shooting star candlestick. It's pretty easy to identify, and then it looks something like this. It has this small body and then has a long wick to the upside, something like this. It has a long wick to the upside. The color can be, either it can be green or can be red. It does not matter, right? And then look something like this on into the resistance level. And then our key entry would be the low of this candle break. And then this candle low breaks, I'm going to take my entry on that retest with the stop loss at high of this candle. And then, the target is obviously the prior swing lows, which you guys learned on the support and resistance on day one. So, if you haven't watched it, go ahead, watch it. So the target is, the prior swing lows on that retest with the tight stops above. Again, guys, I never take trades, on candlestick patterns. Once they form, I only take trades once the price is breaking down the lows of the candlestick, which confirming that, the candlestick patterns is valid, and then we can see the price continuing the downside. There's going to be examples when price is not breaking the lows, and then it just there is the candlestick, and the next thing is price is here, and then slowly goes above and then breaks above it. At that point, I don't even want to enter, unless there's a break below it. Let's look at some of the key examples on candlestick and also show you some examples where it did not work. Again, guys, we're gonna follow the same uh, strategy here as support and resistance. I'm gonna wait for a 15-minute candle to close below my level and then retest in the next candle, and then we'll take the trade. So some of the key examples on the daily chart. Um, let's look at some hourly. Hourly, there are probably more we can find. There is one right here, shooting star candle, 1 hour on shooting star formed, and then stops at the highs, entries at the low break, probably gave entry after hours on ES, candle low breaks, and then taking entry on the retest and then coming down. Guys, again, if it's a good supply zone, and then it's a good resistance zone, and then price is already up, a lot from the bottom, then sometimes I go ahead take that trade, as soon as I saw as soon as I see the shooting star pattern, because the reason is when once you know that this is your risk level, then then it does not matter that where you enter, especially when you are playing 2 to 4 weeks out. But I really care about these patterns, these candles, if they are below 1 hour on intraday time frame, because then there are going to be more signals on a smaller time frame. Then I would go ahead and wait for the retest. But let's say if it's on the daily time frame, on the weekly time frame, then at that point, it kind of a no-brainer there to take the trade, looking at that candles. And sometimes here and there I take it on hourly too, but most of the time on smaller time frame, I do wait for the retest. Um, so there's one example right there, and then we can probably find a lot examples. So there is one right here on the shooting star, this prior supply zone rejected, and then bearish engulfing followed by shooting star and then entry. If you go into smaller time frame, 15-minute right here, 15 minutes also shooting star broke down, retested in this level. This is where I would enter the trade, and then breaking down. targeting this prior lows. And then once this lows break, look at it, break down, retested of this level, and then tested this prior lows. And then this broke, we got probably retest on a smaller time frame right here, and then our next level got hit. So that's how I would use candlestick patterns to trade. Let's say an hourly time frame, then I go to smaller time frame to trade those candlestick patterns. Again, guys, the bigger the time frame is, the solid the confirmation is going to be of this candlestick pattern. Let's say if this candlestick pattern appearing on a weekly time frame, then that means that there's a high probability that we can see lower prices compared to seeing the same candle on a 15-minute time frame. Now let's look at a couple more examples in the back. Oh, guys, you can always find these kind of patterns right at the highs. Mm, like there's one here on hourly, but this lows, they never broke it. They broke it like after a couple hours, but this highs never broke out. So that means if we go to smaller time frame, if we go back right here, give a really nice entry on that break retest and then a gap down. So probably a nice 50 to 100% trade on weeklies using this break and retest strategy. Another thing is, guys, let's say sometimes what can happen is you are trading the shooting star, and then this has huge wick, and then you're trading the weeklies on it, and then you can use the same strategy as support and resistance, which is a fake out strategy on here. Instead of putting your stops here, some if I'm swinging something, then obviously I would use this high as a stop. But if I'm day trading, and then I know this is a lot of risk for my weekly contracts, then what I would do is I would just go ahead and use break and retest strategy on that we talked about on day one, which is a break of this level, retested it, and then as going down, if there's any next 15-minute candle is closing above this prior support, that means that is a fake out, I'm gonna get out. And then if price goes up, then I'm gonna get probably another entry right around resistance, with a very tight stops at the shooting star highs. That's another way to play it intraday with a very tight stop loss. And then right here another shooting star on 50-minute price gapped up, but we have this gap to fill. But instead of going higher, the sellers came in and then pushed the price all the way to the downside. And then the next candle price broke below it and then retested in the next candle, followed by a nice dump on it. So you guys get the idea how to trade and then identify those candlestick patterns. But on the daily, I'm going to show you a couple examples on the daily too. um, there's a one right here shooting star, and then a lot of chop. There's the one shooting star, and then price dumped. Also a nice shooting star candle here. Price dumped downside, and then another shooting star right here. Price dumped. So, there's gonna be a chance where it does not work, like something like this right here. Something like this one. If we go into smaller time frame and then see, I believe 15-minute candle is not even closing below this lows here. So 15-minute candle did close below this one, but in the next candle, price instantly closed above. So that means I'm still gonna get stopped on the trade with a very small stop loss, instead of just waiting for price to hit this highs, or or this highs. I'm just gonna get out on there, and then if price breaking above this candle, that means that all the stop losses got hit. Those who entered using this candle, now we can use this as a uh, support on that retest and then going higher. Right, so there are multiple ways you can trade it. You just gotta have a good hang of it. On trading these candlestick patterns. Definitely good strategy if you're implementing with uh, your support and resistance or any of the strategy that you have. And the next one is another bearish candlestick pattern, which is evening star pattern. And then it's rare to see this pattern, but whenever this pattern occurs, there are high possibility of a reversal. So it looks like something like this. We have this bullish engulfing. We have this bullish engulfing candle, and then followed by it could be a doji, could be a doji right here. It could be a shooting star, and then followed by a bearish engulfing right here. Bearish engulfing, and then where I'm going to enter a trade once this low of this bullish engulfing candle break. Then this is going to enter a trade on that retest right here, and then stop loss, right above it, or if my risk allows, and then I'm in 2 to 4 weeks outputs. My bad, guys. And then I'm going to put my stop at right here. But on intraday, definitely break and retest strategy, it definitely works the best in this case. So let's look at some of the key examples using this one. It's going to be hard to find, but we'll try to find some. This one. So right here, we can see on the daily time frame, bullish engulfing followed by shooting star, followed by bearish engulfing, and then as soon as price broke below it, this bullish engulfing, price retested it, couldn't close above it, and then gave a really nice entry for a short targeting this prior lows, and then this prior lows breakdown retested and then went down. So really good example that we found here. And then this is another one that found, but it did not go all the way, but still some intraday trade, gave some intraday trade, bullish engulfing, shooting star, and then followed by another red candle, and then breaking down, retesting in a smaller time frame, and then a nice move intraday, almost 3 points, which is a lot for intraday movement on it, guys. Again, this pattern can occur in any time frame. It does not matter. It's going to be up an hourly or 15 minute or anywhere. But whenever this pattern appears, I do not ignore it. And then also, guys, it's not going to be as simple as as I showed you guys. When I drew it. It's definitely sometimes the bearish engulfing gonna be like this, or sometimes there's gonna be a wick. It's not gonna be a perfect candle. It doesn't have to be at the same levels all the time. So you have to, that's you need to train your eyes with this one to just identify these patterns. So I have a good example for you guys with the deviant trade that I alerted in the free chat the other day, which uh, which gave me nice confidence on the daily to hold on to this trade. This trade is currently up around 600%. We sniped the top on this one, but I only entered after I saw this pattern on the daily time frame. So we have this uptrend breakdown right here, and then we got the retested at bullish engulfing, followed by a doji, and then followed by a bearish engulfing. A perfect evening star pattern formed, and the next morning when price broke down, I already took positions because it looked really good on the daily time frame right here, and then we instantly dumped hard the next day. Most of you took that trade with me, and then we did score, I think, almost 300% on the first day to break down. So you guys see how it worked out to the dot with this evening star pattern right here. Now moving forward, we have our hanging man pattern, which is also you can easily identify. It looks like hammer right here, something like bullish hammer, but you can see this kind of pattern in the resistance or in the supply zone, and then the body can be any color. It could be red or it could be green, and then we're gonna trade the same way that we trade the any other candlestick pattern. We can wait for this low to break and then take the trade on that retest, and then as it's going down, the stop loss at the highs, or if price goes above, or if I'm playing the intraday time frame, right? And then pretty easy to identify this one. Let's see if we can find that looks in so many of them. I can see this is the one right here, on the daily, say hanging man right here, price never closed above it, but it did go above, but never closed above. And then on when finally broke down, retested this level, lows here, and then dumped back to the downside. On That's the DVN, but we can find any chart, and then we can look at it. Let's look at SPY here to see. Probably SPY is going to find couple. Let's look at hourly time frame. Look at again, guys, the body, yeah, I mean, the wick has to have a 2x and then the actual body. So, it is something, it cannot be like, this whole body and a small wick. The wick has to have a 2x than the actual body. Then it's the hanging man pattern. So right here, we also found another evening star pattern on the hourly time frame into the resistance. So worked out great in this case. Mm, we have this hanging man right here on huge wick, small body, and then price broke below it, closed below, retested it level, and then dumped to the downside. Mm, the shooting star, guys. I'm just gonna see and then I'll tell you guys. Whenever I see any candlestick pattern that we talked about, guys, look at a nice evening star pattern. But the thing is, like, you need to train your eyes. Shooting stars, so many of them. Always, the market makers, they leave you the clues. With this candlestick patterns, and then then it's up to you how you can manage your risk and can trade these patterns. You would find a lot of shooting star compared to shooting star hammers, bearish engulfings. These are some of the main ones out there that you can find. Like this one was good, but we already had a shooting star, so this does not matter. The hanging man, evening star. Let's see if we can find some couple more examples. Let's look at 2 hours. We can find something in 2 hours. Mhm. Okay, this one kind of looks like a hanging man, but the wick is pretty small, so I wouldn't consider this one, as the wick has to has a long one. I did show you guys a couple examples, so let's just let's look at cues. If we don't find any, we'll just move on. Let's look at hourly on cues. A good example, hanging man right here on 1 hour, probably somewhere, in the prior resistance right here, rejected this prior resistance on hanging man, and then next candle broke below, retested it, and then went to the downside. Um, that's a good one. And I'll try to show you guys, as much examples as I can, because because the thing is, guys, when you're gonna look back, it's so easy to look at this and then say this can work, in hindsight, but the real test is when we're actually trading it live, and that that's you need to that's when you need to manage your risk. That's when you need to put your money to work, looking at these patterns. I can show hundreds of examples, but it does not matter. If you're not testing it in a real time, if you're not back testing it, in all these patterns. So let's move on from the hanging man to the another one, which is a tweezer top. Tweezer top is something rare to find too, but you can definitely see this one. Something like we have this bearish engulfing, and then we have followed by, I mean, the bullish engulfing followed by a bearish engulfing, and then the 80% should be body, and then the top should be similar, like exact top. It could be, a little bit up and down, but if it's similar, that'd be nice. So, small wick, let's say, the 80% should be body, and then 20% is just the wicks. And then how we're gonna trade it once we see, price is rejecting this small wicks, the prior resistance, and then we're gonna take a trade once price breaks this bullish engulfing lows, and then stop loss either at prior highs or intraday on this support break with the entry on a retest, stop loss if candle is closing above here, or if candle is closing above here, depending on your risk again. So I'm not going to find these examples because I don't see many tweezer tops and tweezer bottoms, but Let's see if we can quickly find one or two for you guys. Mm, Definitely gonna be a hard one. So now, so now we talked about a shooting star, evening star, hanging man, all these patterns. Triceratops is something is rare. I don't see it often. This can't be one. The eye should be equal with both. We just need to look at some of the reversal candles, and then we might find what's right here. 1 hour we got this evening star pattern. Evening star. A lot of evening stars we found at the reversals. So so this thing definitely works. And then like shooting star and all the patterns. They are one of the key strategies too in my trading. Right here, guys. This is a to the top. So dual candles. Uh, equal highs. Price rejecting highs, and then another wick here, and then entry on that low break. But prices gap down. Probably we got an entry overnight with this one. So a good example for the tweezer tops. Another one here, but it did not play out well, but it did play out like later on. There was the tweezer top, but price did close above. So if price closing above this level, we did close it, and then it went to the downside. So another one right here. So now we find a couple. That's tweezer top, a bullish and bearish candle with the wicking, equal lows breaking, and it's going to the downside. So that's how you can identify these tweezer tops. So now let's move on to the three black crows. Three black crows is something, I would say a very bearish pattern, and then you can see it in a strong downtrend, right? And let's say on a 50-minute time frame, we'll go, and then we can probably find more in a 50-minute time frame, these patterns. So how it looks is something like this. We have this bearish engulfing, and then we have this another bearish engulfing, and then we have this another bearish engulfing. So three back-to-back bearish engulfing candles, which almost 80 to 90% should only be body. The wicks should be smaller, less than 10%, or around 10%. So the main goal is to look at these three candles. As these three candles we're gonna look at, and then we're gonna take an entry on that third candle low break with the retest and going down with the stop loss at this first candle highs. We can't have a stop loss at this highs because this is going to be a lot big of a stop loss. But those who trade this pattern, those let's say because the target is obviously bigger too with this one. So sometimes a swing trader use this highs too as a stop loss, but I just keep my stop loss at the first candle highs, and then if let's say if price goes to this level again, I'll probably take another entry if I get stopped out here, with the very tight stops at this highs. So let's look at some of the examples here on this one. So right here, guys, the length of it, can be differ from each other. It's not going to be a perfect all the time, right? So we have this three back-to-back, right of open, three back-to-back bearish engulfing candles, and then I'm going to wait for the next candle to close below it. It did close below, and on the retest I'm going to take my entry on it, and then we see price consolidate in a bear flag, and then what did we make in the bear flag? An evening star pattern here, bullish engulfing doji, and then followed by a bearish engulfing this low breaks, or this low breaks, nice entry on that retest. Let's look at a couple more. So as right after open here, we have this one, we got two, and then three bearish engulfing candles closed below, retested it, took my entry right here on the retest, and then price dumped downside, and then gave a really nice trade. So we also got a three here, one, two, three bearish engulfing candles. Price never closed below it, so there is no trade here at these levels. Right. So you need to see three candles, coming from the resistance or from the supply zone. If it's something in the middle, I wouldn't give it much importance. This is where the trend started. After top, so three candles, and then followed by a breakdown retest, a nice move down. Right here. So, if you, let's say if you're trading a trend day and then you see this in a trend days, are really helpful on a trend day. If you miss the initial move, definitely helps you catch, some of the move on a trend days. So now let's move on. So guys, so if we already, talked about some of the key ones, bearish engulfing candles. Just gonna, summarize one really quick. The first one that we talked about is the shooting star, then the evening star pattern, and then tweezer top, hanging man, and three black crows. We ended this bearish candle stick session uh, for the bearish reversal here. I mean bullish reversal. So now, let's look at some of the bullish candles out there. The first one, is pretty obvious. You probably, heard it, a couple times, or you probably traded too in your trading, which is a bullish hammer. It looks like something like this. Again, the body can be red, it can be green, it does not matter. And then, it just a shooting star is the opposite of it. And then, the wick should be double the size of the body, and then entry on that high break, on the retest, and then price going up, or at the lows here um, for the longs. So now let's take a look at some of the examples right here. We're gonna probably find it in the bottom uh, right here. Really nice hammer, a long wick right here into this prior demand, and then price closed above it, retested this one, and then went higher. So really nice trade following this hammer. Formed this hammer right here into this support, formed hammer, broke above it, retested it, went higher. Couple good examples on hammer, right here another one, into this support, formed this and then broke this range, and then retested the next candle where gave a really nice entry, and then break higher. Again, guys, it doesn't have to be on the same time frame. If you saw something on average time frame, you can definitely go ahead in a smaller time frame to take the trade on it. Another one right here, nice hammer. This one here is the red one, price breaking above, and then also breaking this downtrend at the same time. So confirming a dual confluence here, and then went higher. Shooting star, coming down. Oh, guys, once just specifically looking for the candles, then there are very high chances that you're gonna find one almost every single time into the support and resistance. Or this one easy to find and easy to trade. So now let's move on to the morning star pattern. The morning star is the opposite of the evening star, which is something like this. We have this bearish engulfing coming, and then followed by a doji. It could be a hammer, and then followed by a bullish engulfing candle right here. This bullish engulfing is breaking, should be breaking this prior highs. Should be breaking this prior highs, and then something like this. So now let's look at some of the examples if we can find. I think I saw one on DVN on the daily chart. Right here is a good example. Bearish engulfing coming, followed by doji, and then formed bullish engulfing, and then broke out, went higher. After that retest. mm, let's look at SPY hourly. We're gonna probably find couple. I think I recently traded it too of that downtrend too on SPY. We got the shooting star. Right here is a good one. Found a bearish engulfing doji, and then broke above this prior highs. Found a bullish engulfing, breaking it, retested, and went higher. So a good setup. And then right here we have this evening star too. And these setups, they always, always there. I always try to look, for some kind of a pattern into the support and resistance. Just wait for a confirmation, so I know I would have a a risk level to trade. And then right after this, what we talked about just now is the morning star. So right after morning star, there's a easy one, that probably everyone is called bullish engulfing. And then this a type of pattern you always find at the bottom of the downtrend, which is something like this. A bullish engulfing on high volume is definitely a good to trade. If you look at this volume coming out nicely higher than this prior candle. So the relative volume should be higher. It doesn't have to be a huge spike. If you compare the past candles, the relative volume should be higher if you're trading any candlestick pattern. And then a bearish engulfing right here at the bottom is the prior support, breaking out higher, and then on the retest, a nice entry followed by move up. Right, and then another bearish bullish engulfing here, breaking out on a smaller time frame. If we go into 15-minute, this bearish bullish engulfing right here, breaking out a small, probably 0 days or 2 days out, a 20-30% play. But as long as candle closed below, then stop loss is hit. Again, you don't have to, you don't have always used blindly these trades. You can always look at some of the prior highs and prior swing lows, and then adjust your levels accordingly, and then can take a trade with those. Let's look at a couple more examples here in the bottom right here. We found another morning star right here, bearish engulfing doji, bullish engulfing, break higher, and then went higher. Also, this is a bullish engulfing, breaking higher, so another good trade. Trading both the patterns in one. This is a now we find another morning star right here, bearish engulfing doji, and bullish engulfing, breaking higher, taking the trade on the break higher, or the bearish engulfing high break trade with the stop loss at if candle closing below this level. So let's go into smaller time frame to find some of where did it go. Right here. So it was here, but again, as I told you can adjust your levels accordingly, point here and there, just to have a good risk level to trade with. And then the price broke out, retested it, and went higher, gap filled, and then dumped after. um, and then we have this 50-minute hanging man right here into this prior resistance, price dumped. So you can see they are everywhere. You just need to be a little bit more attentive when you're watching and looking for these patterns here. And then right after this we have three white soldiers, same as white crows, easy to follow on an uptrend day. Three back-to-back bullish engulfing candles. I mean, if you already saw the first one, that high chances that you already in a trade on that retest. Let's say somehow you missed the entry, and then and these three candles indicates a strong uptrend or a trend day. So whenever they have, if I'm in a short position, I try to stay away from the shorts or on the sidelines are most likely gonna be in the longs when I see this kind of setup on any time frame. So looking at 15-minute, right of open, three back-to-back bullish engulfing candles, breaking this resistance, and then closing higher on the retest, going even higher. Mm. 30 minutes again, the bigger the time frame is gonna be, that higher chance is that you're gonna find a trade, right? And then looking at 1, 2, and 3, back-to-back candles. Next candle is closing above and retested, went higher, stop loss at this prior, the first and the third candle low. On the bearish one, we had at the first candle lows. I mean the third candle lows. Makes sense. So hanging man, price to the downside. So many examples, guys. Now I can see everything, clearly, all these patterns. Now, I'm in the zone, just specifically looking for these patterns um, on 30 minute or an hour. It doesn't matter time. And I'm another evening start doji. Let's look at some of the key ones out there. The bullish ones. No, we are not in a bullish trend. Right here we got this, 1, 2, and 3s, but the thing is that, I don't want something in the middle. This is not something I would consider a nice one, but it was three back to backs were definitely a good sign. But I want something, from the bottom, and then that that's actually started from the bottom, bullish engulfing the first candle, something like this, break and retest, and then the trend started 1, 2, 3 bullish candles breaking above. And the stop loss is that this third candle lows here. So guys, that was the three white soldiers, and you guys probably know about Bullish engulfing, Bullish engulfings. We talked about this one, and then I want to quickly touch upon this one specific candle, which is the indecision candle. It's called Doji, right here, and that means buyers try to push it higher, then sellers try to push it lower. So they and the candle closes somewhere in the middle. So this is the indecision candle. So I mark highs and lows of this candle like this, and then if if high is breaking of this candle, then I'm going long. If lows are breaking, then I'm going short on depending on the time frame and setup too, right? And then let's look at some of these dojis. You can find the guys with the doji says, I traded, it can be anywhere in the chart. It could be at the highs, it could be in the middle, and it could be at the bottom too. As long as I see a nice doji candle and price is breaking above or below it, I just go ahead and take the trade. Like right here, price formed a doji, and then next candle broke below, gave a really nice intraday short setup, targeting this prior lows. And we have this another doji right here. Price is breaking above of this doji and then closing above it, a really good intraday scalp too. The thing is, like, these kind of doji candles, they can also find in an uptrend, price uptrending, formed a doji, and then yes, you don't know where to enter, and then just wait for a doji to form and high to break, and then take the trade. And then same goes with the reversal too. Price is going down, you don't know where to enter. So downside doji formed, and then enter the downside, and if trend is has to reverse, and then have to break the high of the doji, and then taking the trade at the highs, and then with the stop loss at the lows. So, and then there's another one that I would like to talk about. I was not planning on talking about this, but that just came into my mind, which is the inside candle. So a lot of you probably heard there's the inside day, inside candle. So how do you trade it? So it's pretty simple to trade it. So it looks something like this. This is, let's say, a bullish engulfing candle, and the next day price opened below right here. It can be red or green, does not matter. And then the next day, I want price to break above, this inside candle, this highs, or this lows here. We have this inside candle now. Now, if the price is breaking above this highs, that means I'm gonna go long. And if price is breaking below this, that means I'm gonna go short on this one. So pretty easy to follow on these candles. But I only use it for intraday uh, time frame. Like today we have this intraday candle, And then if tomorrow we break above this one, I'm gonna go long. If we break above this low there, I'm gonna go short on SPY. You can always find a lot of examples right here. Inside candle, a lot of inside candles, price finally breaking below it, retesting it and going lower. Right here, inside candle, breaking the lows and then went lower. So a lot of examples on on any candlestick that you want to trade. You're obviously going to find a lot of examples, but the main thing is to trade it real time. So so guys, that's about it for today. I try to show you, tons and tons of examples live, that I trade every single day, and then that I actually trade like shooting stars, the evening stars, bearish engulfing, bullish engulfings, all these are common candlesticks. I try to take the trade into the support and resistance, and then I take that trade same way that I explained to you on the break and retest of the lows or the highs, with the stop loss if there is a fake out, as we talked in the day one of this technical course. Again, guys, I'm going to wrap up today's class with this one. Again, if you guys have any question about any candlestick patterns or just in general, do not hesitate to ask in the chat or DM me. So I'll catch you guys tomorrow with another class. Have a good day, everyone.